Hello and welcome to Within the Frame, where we delve into the most up-to-date issues across the globe. I'm Kim Mok-yeon. South Korea's finance ministry says the nation's economy has been on a path of recovery for 6 straight months, largely driven by strong exports. Seoul has, as of September, enjoyed a remarkable 12 consecutive months of export growth thanks to the semiconductor sector. South Korea posted exports worth $58.7 billion, which not only is the largest amount so far this year, but also an all-time high for any September. However, recent figures from Samsung Electronics have raised concerns about the industry's future. So how sustainable is growth in the industry, and what challenges lie ahead for the Korean economy in general? For answers to this, we invite Kim Sei-wan, professor of economics at Ewha Womans University. Welcome to the show, Professor.
Thank you for having me today.
And we're also joined by Lee Hyun, associate professor at KDI School of Public Policy Management. Thank you for coming on, Professor.
Pleasure to be here.
Now, starting with Professor Kim. So as of September, like I've mentioned, South Korea's exports have seen increases for 12 consecutive months. The government is optimistic about maintaining a positive export trend this month as well. Would you attribute the strong performance in exports mainly to semiconductors?
Korean export maintains pretty robust momentum from the beginning of this year. As you said, the main driving force of the whole export is the semiconductor export, which has been the #1 export item from 10 years ago. The export of semiconductor continued its upward trend this month. Actually, the semiconductor export increased by 36% against last year in early October. In the same period, however, most other categories saw a decline, including passenger cars by negative 3.3%, petroleum products by negative 40%, and so on. Actually, semiconductor export had a hard time until 2023 due to the shrink in global demand after the rise of demand over COVID pandemic. But again, the export of semiconductors has been on the rise since turning upward in November last year, continuing to post double-digit growth rate so far. It is believed that this upward trend of global semiconductor demand would be continued for 2 to 3 years at least, thanks to the rise of artificial intelligence industries.
Right, so 2 to 3 years we're looking forward to. That's good to hear. But however, there are also concerns regarding the outlook for the semiconductor industry. Samsung Electronics has reported preliminary results for the third quarter that fell short of market expectations. Professor Lee, how do you foresee semiconductor exports in the near future? And do you think it's possible for South Korea to achieve its largest export performance this year?
Yeah, the current underperformance of semiconductor industry in South Korea seems to be more significant than that of Taiwan and Japan. And this might suggest that the structural characteristics of South Korean semiconductor industry is contributing the lower than expected performance in addition to the global IT cycles. The main export chips of Korea are the memory chips used in a wide range of electronic devices, including smartphones and servers. The weak global smartphone demand is seen as a major factor contributing the slowdown of the recovery in the sector. Also, there are concerns about delays in some Korean companies entering the advanced high bandwidth memory market, which is compounded by intense competition within the sector. So there is growing demand for HBM used for AI and data processing, and the ability to maintain a competitive edge is key challenge for semiconductor companies in South Korea. Overall, due to the base effect, the pace of recovery in the semiconductor export is expected to be slowed down a bit, but an year-on-year export growth for this year is expected to remain strong.
That's good to hear. Now, meanwhile, there's speculation that there are signs of strain in the long-standing alliance between American chip company NVIDIA and Taiwan's TSMC, that this could benefit South Korea's Samsung. Professor Kim, can you explain for us on the current situation in the global semiconductor market?
Well, first of all, I'm not in a position to say that the rumor is true or not. But in the history of global chip industry, major corporations' decisions have determined the fortunes of many companies. For example, when Apple's iPhone rolled out in 2007, the CPU of iPhone was manufactured by Samsung Electronics. But Apple decided to produce its iPhone CPU by TSMC of Taiwan as Samsung Electronics begins to produce its own smartphone, which is Galaxy smartphone. This is why TSMC became so big and powerful in non-memory chip market today. So if the rumor is true about the conflicts between NVIDIA and TSMC, and then NVIDIA finally decides to move to Samsung Electronics in its production of non-memory chips, it can be a turning point for Samsung Electronics to grab the leadership in global non-memory chip market in the long run. What I'm saying is in the future, if that is true in the future, we will realize that this was an important moment when we look back.
Now, taking a step away from semiconductors, earlier this month, the Bank of Korea lowered the benchmark interest rate to 3.25%, and this has drawn large attention to the timing of domestic recovery. Now, while the government suggests that gradual recovery driven by exports is ongoing, there are voices indicating that recovery is lagging at some point. Professor Lee, what is your diagnosis?
While exports remain resilient, as we have seen so far, the domestic demand is subdued, driven by high price levels despite inflation dropping to its lowest levels, heavy debt repayment burdens, and sluggish income growth among especially the self-employed. Also, the global geopolitical environment is downside risk. Uncertainty related to real estate project financing restructuring remains a potential downside risk for construction sector.
Right. And the direction of international oil prices, which impact the domestic economy, are also under scrutiny. Despite instability in the Middle East, prices have stabilized until around $70 per barrel recently. Professor Kim, what are your thoughts on the future outlook for international oil prices and the factors that influence them?
Well, that is a tough question. I wish I had a crystal ball for oil prices. Actually, in economics, and in other business measures too, we have been trying very hard to forecast future oil price through economic data analysis and theory. But it is so far from perfect because oil market is dominated by geopolitical factors, which is not predictable, and market sentiment, which is not rational either. As of now, there are quite a few uncertainty factors in global oil market, like the war in Ukraine and another war in Israel, particularly as the tension escalates between Iran and Israel. The worst scenario of the global oil market is Iran's full-scale participation in the war. Market expects that if that happens, even though that is the worst scenario, market's oil price would be skyrocketed up to $200 per barrel. But as of now, increased oil production from major oil-producing countries like United States has helped offset potential supply disruptions. Also, global demand has remained steady due to economic uncertainty, particularly from China, and ongoing energy transition to environment-friendly energy sources.
So are you implying that it could go up, but not as dramatic?
Well, it really depends on geopolitical factors in the future. But since the power of stabilizing the oil market is stronger than that of the disrupting factors from the geopolitical factors, the global oil market price will be stabilized at the level between $70 to $80 per barrel.
All right, Professor, thank you for clearing that up. Now, here in South Korea, the government is set to decide on Wednesday whether to extend its fuel tax reduction scheme that has been in place since November 2021. Now, this measure has already been extended 11 times and is now into its third year already. Professor Lee, what are the chances of an additional extension, and what reasons might support this decision?
Initially, the fuel tax cuts were introduced in response to the 2022 global energy price surge on the back of high global inflation. It helped actually reduce the increased living cost, especially for those who are vulnerable. But the fuel tax cuts resulted in significant losses for state-owned utility companies and reduced fiscal revenue. Now that energy prices have fallen substantially from their peak in 2023 and remain stable, there is a need to realign the domestic energy prices with international commodity prices to limit the fiscal risks. Actually, last July, the government reduced the rates of tax cuts to 20% for gasoline and 30% for diesel and LPG. And it is now expected that the government will further reduce the rates, but the fuel tax cuts will be extended once more to ease consumer burdens as well as continue to curb inflation. The additional considerations for the decision will be the geopolitical situation, as mentioned by Professor Kim, such as conflicts in Middle East and Ukraine that can affect the global energy prices.
Right. Then, Professor Kim, if the government chooses to extend the fuel tax reduction, what kind of impact might this have on domestic recovery?
Of course, that will give a positive impact on domestic economy in terms of the expansion of the domestic consumption, but the impact will not be so huge as expected. If the Korean government extends the fuel tax reduction, of course, it could positively impact domestic economic recovery by reducing cost for businesses and consumers. In addition, lower fuel prices would help ease transportation and manufacturing expenses, that potentially lowering inflationary pressures. This in turn could boost consumer spending and economic activities in the long run. However, it should be noted that the measure might also reduce government tax revenue, which could affect public spending or lead to higher deficits if maintained over the longer term. So balancing these outcomes would be crucial for sustainable recovery.
Right. So for the sake of our understanding, so this fuel tax cut, how long can this be extended, Professor? Could this just go on and go on?
Well, as we talked about, the impact of a real positive real impact on domestic economy is not so huge as expected from the oil tax cut. However, the oil tax cut is in a certain way determined by political purposes from both of the ruling party and opposition parties. So this is something item that both of the ruling party and opposition party agrees on. So I believe that even though the economic impact of the fuel tax reduction is not as large as expected, that tax reduction will be continued at least by next year. But in the end, as inflation pressure disappears and as economic recovery goes on, maybe hopefully by next year, the tax reduction will be stopped sometime hopefully next year.
Right. Thank you for the explanation. So now, meanwhile, in another news, the world awaits the results of the upcoming U.S. presidential election on November 5th. And this is also expected to have a significant effect for the South Korean economy. Professor Lee, in what aspects could the outcomes of the U.S. election affect domestic industries?
First, the tariff policies proposed by the two candidates could have significantly different implications for South Korean economy, given South Korea's strong trade ties with both the U.S. and China, especially in strategic high-tech sectors, including semiconductor industry. Trump has pledged to implement a 10% tariff on all imports into the U.S., while imposing a much steeper 60% tariff on products sourced from China. In contrast, Harris is expected to adopt a more targeted approach to taxing imports. Should Trump win and escalate trade tensions between the U.S. and China, it is likely that trade and investments will decline, especially for Korea's leading IT industries. And second, given Trump's commitment to more aggressive policies towards North Korea, it is anticipated that global risk associated with the country rise under a second Trump presidency. This escalation of risks may have adverse consequences for financial markets and foreign exchange markets, potentially leading to higher market volatility.
Right, but regardless of the outcome, both candidates are likely to focus on decoupling from China, which will highlight the need for new industrial and trade strategies. Professor Kim, what strategies do you believe South Korea should implement in response?
I believe that regardless of election outcomes in November, the U.S.-China competition over advanced technologies such as semiconductors and battery will intensify. Particularly concerning part is that Korean battery industry may face a reduction in Inflation Reduction Act, IRA, benefits depending on the election results, which highlights the urgent need for proactive measures by Korean producers and Korean government. If Harris is elected, there is a strong possibility of strengthening domestic investments incentive through an amendment of CHIPS Act, whereas if Trump wins, it is likely to unfold in the form of reinforcing the guidelines provisions of CHIPS Act and tightening investment requirement for allied countries to receive subsidies. That means if Trump wins, more high-tech Korean firms' plants will be moved to U.S. territory. In the chip war between U.S. and China, securing high-performance semiconductors and talent is essential. And if Trump is elected, policies aimed at strictly blocking access to China will be strongly enforced. But if Harris wins this part, U.S. government's strict blocking access to China will be, in a certain way, lessened. As of now, Samsung Electronics and SK Hynix has a huge high-tech plants in Chinese territory, and the renovations, renovating the equipment and machineries in the plant produced by U.S. companies allowed by U.S. government. But as of now, under Biden administration, and what I'm saying is if Harris wins, that kind of situation will be continued.
Right. And our final question before we let you go. In a few hours from now, the International Monetary Fund is expected to update its World Economic Outlook report. And the previous report in July projected growth rates of 3.2% for this year and 3.3% for next year. Given the upcoming U.S. election and increasing geopolitical tensions, Professor Lee, what do you expect from the new forecast?
As you mentioned, the new WEO report will be published in an hour or so. So maybe my expectation could be wrong. But I think uncertainties around the baseline forecast for global economic growth remain elevated, though the level of uncertainty has not significantly shifted since last July. And also there is the factors that reduce the uncertainty, which is the monetary easing of central banks contributed to price stability in most countries without entering recession and large-scale unemployment. So I expect that the emphasis of the new IMF forecast could be more on the medium-term growth prospects of global economy. Boosting growth potential would be a key concern for many countries in order to deliver jobs and raise tax revenues for debt repayments, investments in key infrastructure, and green transition amid aging population.
All right. I'm afraid we'll have to conclude our discussion at this point. We're running out of time. But thank you so much for your insights, Professor Kim and Professor Lee. We appreciate it.
Thank you very much.
Now that wraps up our program for tonight. Thank you for joining us on Within the Frame. Be sure to tune in next time as we continue to explore the stories that matter. Until then, stay informed and engaged.